Yo guys, welcome back to Stock Talk Insider. Today we'll be talking about Honest Company, what's happening with Honest Company and why the price is down like this. So, welcome back. Today we're diving into the Honest Company again. Why is its stock under pressure lately? We'll analyze revenue growth, profitability, legal risks, and what investors need to see for the stock to rebound. So in Q1 2025, Honest reported a 13% year-over-year revenue increase to $97 million, but Q2 2025 showed only 0.4% growth, which was $93 million. That brings the first half of 2025 average down to about 6%, rising questions about the sustainable growth. So this is the quarter release for Honest in Q1, which was marked with the main drivers over here. So we achieved a quarterly revenue of 97 million, an increase of 13% in the first quarter of 2025, which was 13% up from prior year, and delivers net income of 3 million and expands gross margin by 170 basis points to 39%. From prior year quarter over quarter, and reaffirms full year 2025 financial outlook. So actually the highlights were just these things. So revenue went to 97 million with an increase of 30% year over year, gross margin of 39%, net income of 3 million, and adjusted EBITDA of 7 million, improved by 4 million, which was very good. And also they were in how much cash? Let's see. They had 73 million in cash. So we also have, of course, quarter two. Quarter two was actually a much worse quarter if you look at Q1 against Q2. Q2 was literally one of the more baddest quarters they had, I think, but still net income became 4 million, and increased by approximately 8 million since the prior year. Revenue was 93 million, which increased only almost not even 0.5%, so 0.4%, and gross margin was indeed 40.4%, which expanded 210 basis points. So this was one of the best points in this quarterly report for Honest. And adjusted EBITDA of 8 million increased by 22,000. So that's still reasonable for the size of the earnings, but again, that's not that much. So for our second quarter 2025, this was guidance. We were able, this was actually what they said about their revenue and all of their income. So we were able to drive profitability improvement, gross margin expansion, and revenue growth, resulting in positive net income for the second consecutive quarter, said Chief Executive Officer Carla Vernon. The team's relentless focus on discipline, execution of our transformation pillars, and brand maximization, margin enhancement, and operating discipline, along with our tariff mitigation strategy, have enabled us to continue successfully navigating a dynamic macroeconomic environment. We have a healthy balance sheet, no debt outstanding, and honest community loyal to our collection cleanly formulated personal care and baby care products. With our financial results for the first half of the year, the power of the Honest brand, and our focus on executing strategy, where we are reaffirming our full year 2025 financial outlook. So if you look at it, actually a very good and very stable business. Also operating expenses going down and still growing 0.4%, also margins expanding. So if you look closely and deeply into these numbers, if someone said to you that this company is just improving on their stability, improving margins, get the margins as big as possible, and also just in its normal operating flow, they try to improve those things, of course. So the operating flow, the margins, revenue is actually the one that they are not focusing on that much, but they focus on actually all of the products also, because They did have a problem with diapers. They did improve some of the reviews about those diapers, and now they have a new collection of those, which were a very big improvement, and you already see that in the reviews. So hopefully, in next year we'll see also a nice upside in those sales. But again, they're also focusing on makeup brands, self-care, and all of those things. So there's a lot of bouts on us that came with the company that was not exactly with the company in the beginning days. Also, they've only been like 2 to 3 years. What was it? I think only 2 to 3 years, where it was the time that they are actually doing better than the years before. So that is the time period that Carla Vernon had already for improving the company, and you can already see it. It's of course it's a little bit going sideways. It's not growing, but also not going down. Things like cash flow are not that good, but yeah, it's still improving on all of those different components, in my opinion. And I do believe that the company is just stabilizing, trying to stabilize it as much as possible before going forward, because I rather see the company struggle in those days like now than when we have such a big revenue growth, but they can't really operate well on those higher and bigger numbers. So, having said that, Alles delivered a strong Q1 result with a 13% revenue increase and improved profitability. Q2 showed modest growth but continued margin expansion and profitability. And then, yeah, that was that. And of course, despite a strong Q1, the flat Q2 pulls the average down to around 6%, below the 4.4 to 6% guidance range, and they did up their guidance from 4 to 6, so they believe that the next half of 2025 should be very strong. And well, we'll see about that, of course. But if they can pull off like just above 6% in total revenue growth this year, so that's above guidance, then they did lower the percentage of growth since last year, because that was around 10%, and now we're guiding for 6%. So if they get above 6%, that means that they initially got first 4% for year-over-year growth, but already went up with their guidance to 6%. And if we also can go even further with beating the guidance of 6%, that means that they have upped their previous guidance to 6% and they beat the guidance that they upped. It's still not as much as last year, but of course, as I said, I'm not looking too much into what the company is growing. I just want to see improvements in cash flow, more gross margins, and well, I want to see that net income is also growing, but that doesn't need to grow as fast as I want to see the margins grow, and as fast as I want to see the cash flow become better and better and more stable. Because if we have that are actually the more negative things about Honest. Well, gross margins not, but cash flow is something that they really need to work on. So yeah. Also, sentiment was down over the last couple of days, so we were actually very strong around the $4 mark, but we did actually lose the grip on the $4, and we went down to around the $3.6 range. The reason about that is probably one of those things. So key facts is that the Honest company has settled claims of misleading investors about its main product safety and effectiveness, enabling eligible investors to recoup some losses. The Honest company has settled claims of misleading investors about its main product safety and effectiveness, enabling eligible investors to recoup some losses. The Honest company generated $389.8 million in revenue last year, but struggles with limited distribution, potentially hindering growth against larger rivals. So this was one of the things, together with, of course, the Q2 that wasn't really growth effective, bringing it down with 50 cents to around almost 350, but we're still around the levels of 368. So if you look at this, we do have two support levels if we look at it technically. This was one of the supports that broke through, so now we are in between this where the blue line is. So the blue golf line is actually the support level and support range of two support levels. So we have the red one, this is this one, and the blue one is the bottom of this one. So we did break the red one, so that's already broken, but we got back above it with a nice candle. But we can break it again, of course. But I do believe that we did broke out with a meaningful resistance. So going back to here should be a bit abnormal, especially because the news of the claims have been settled. So that's behind us. We don't have any claims anymore. That's behind us. It had a negative impact and can have a little bit of a negative impact, but normally with time going forward, this thing should fade away. And of course, Q2, we can't change anything about it. They just have to show what they can provide and give us in the next quarter. And if that is good, then the things about the claims will fade away. Q2 will also fade away in time, and then we'll start to look forward again to earnings. And yeah, I'm very excited about the earnings for Honest because of the very big dip. Because as you see, we did have a very nice consolidation around $4 mark for a while, around 2 months, I think. And well, I don't think, I just see it around 2 months. And now we did break it very nicely. And we did not go further than the $3.61. So that's really the bottom, I think, for now. Unless something else comes up or earnings are very bad, then we'll probably go to like the levels of 350 and below the 361. But 361 at this point is a very strong resistance. We haven't gone down that since, what was it? Since 24. So that was literally this time last year. Almost a year long we've been above this. So it's a year since we've come the closest to it. But oh no, this was the closest. So now we just have to see if we can go back to it. But for now, I do think that we're very steady. And well, it's just something we'll have to see with time going forward. But as I said before, claims are behind us, and yeah, just now we have to see what guidance will be, what the earnings will be, and if there's something good of some new news that comes out, that should also help the stock normally. But for now, I do think that in the long term, this should be a buying opportunity. So yeah, that's an update on Honest stock. Strong Q1, almost Q2, maybe bad Q2 actually, and legal settlement impact investor sentiment. For the stock to recover, the second half must show robust growth and sustained profitability. Keep an eye on margin trends, cash flow, and any further legal developments. That's actually what we should be looking at the most. And yeah, that's it. Thanks for watching, and that was my view on Honest for now. And I think it's still positive, and it's still nice to buy some shares over here. And I do believe that around $6 to $7 is still very possible by 2026. And I do believe that with the right growth in a couple of years, so in like two to 3 years, we can go above the 10 to 12 to $11. And eventually in 5 years, I believe the stock can be above $20. But of course, then all of the things that we're talking about should happen in the right way. So, thanks for watching, and I'll see you guys later.